Good evening to all of you. Welcome you to today's webinar. Today we are going to review what happened in the last settlement. I think it's not December, it's January settlement. So correction, please. So it's a January settlement that we are going to review, right? So what happened in this month? What is it that we can expect next month? I think that is what we are going to look, and we are going to look at Nifty, Bank Nifty. Then let's also look at Nifty, IT, then small cap, all indices, and then some stocks, small and mid cap, and also other indices, other stocks. Now, one distinguishing important feature in the last couple of days at least is the big FII selling. Now, FIIs have been very regularly selling, FII selling, and FII selling normally comes in large cap stocks. They invest also, and when they exit, they also sell in large cap stocks. And large cap stocks are the important thing which plays a very dominant role as far as index is concerned. Domestic institutions have a mix of large cap, medium cap, and small cap. Okay, so when we look at the divergence, let's look at whether the mid cap and small cap indices, how they have performed, which will give an idea that whether domestic institutions are playing a major part as far as the mid cap and small cap. Now, large cap stock has come, the selling has come, and indices have gone down, predominantly due to global reasons. Right now, Indian reasons are not many. It's only the global reasons which have dragged the Indian markets lower. And the major reason for this has been the US Fed decision to hike rates. That is, they have not hiked, but they are going to hike rates, and that has been communicated that in order to control inflation, they will start hiking rates maybe from March, and then they will progressively increase rates 3 or 4 times this particular year in order to tame inflation, because inflation and growth both are going at multi-decade highs. In US, GDP also has grown nearly 30-40 years, whatever they have not seen, they have got that much of economic growth. Similarly, the inflation also. So it's a growth accompanied by inflation, and that is one reason now the US Fed feels comfortable that employment and economic growth have taken place significantly, and it does not warrant a very accommodative policy, which they gave in the last 2 years approximately since the start of pandemic in 2020. So that extra liquidity, or the liquidity, is going to be withdrawn, and interest rate hikes are to follow. Now, whenever the interest rate hike takes place and liquidity is sucked out, equity markets generally tremble, and probably takes time for it to digest and stabilize at some levels. So for a couple of months it can gyrate, for a couple of weeks at least it will gyrate, and then realize that probably things have, the valuations have come to a decent level. From there it can be bought, because due to low high liquidity and low interest rates, lot of stocks were built, the valuations became expensive, particularly the top stocks also. So those are getting corrected. Now, besides this, the corporate earnings, now company earnings, both in US as well as India, because the reason why we are talking about US is Indian markets generally have a very strong correlation with US equity markets. Okay, so if those markets rise, Indian markets also rise. If markets fall there, Indian markets also fall. So that is mainly because of the index, because of the large cap where the FIs are predominant. It need not be said about every other stock. We are not talking about every stock. We are talking about the large index, okay, whether it's a Nifty or the Sensex. Now, the company earnings have started to come out. In India also it has started to come out, where some companies results were good and some companies results were not up to expectation, even within the same sector. For example, in IT sector also, Infosys and TCS results were welcomed by the market compared to HCL Tech and Wipro. Similar the case in other sectors also. And because of this, we have seen, despite good results, the markets have not taken it that kindly. Now, for example, HDFC Bank results good, Kotak Bank result is also good. So these companies have reported very good results. But only thing is the overall sentiment and the flow of money is not very conducive for large cap, and there is heavy selling that is taking place. Now in US, the company earnings are quite mixed. For example, Netflix, the results and the future pronouncements about their future estimate were not liked by the market. Microsoft and Apple have come out with very good results. Tesla has disappointed. So we are seeing very mixed bag in US earnings reports. Because of that, we have seen the market going up and down, despite the overall containment of the Omicron, because the Omicron fear started in December, but somehow that I think that has not played any havoc with the economic growth. Maybe a little bit down here and there. Some it could be there in some service areas, but overall I don't think it has had any deleterious effect to the extent that the initial phase of COVID had in 2020. So it is not Omicron. It is mainly the interest rate hikes and the liquidity withdrawal by Fed, that announcement, and the corporate results coming out of US. I think both of them have played a part in bringing down the large cap stocks down, and because of that the index has fallen. Now the important pronouncement that is to come in next week is a union budget. So depending on the type of announcement that is going to come from union budget, we may see some sort of pullback in case if the announcements are considered positive for the market. If there is something negative, it will get further compounded. The fall can get further compounded. But that is for a shorter period of time. Longer term investors need not fear, and longer term investors should consider any further fall as place where to invest, because we have seen that if a fall takes place which is below say 12-month moving average or 20-month moving average, if it comes closer to that, then the next 1 year return or next 2 to 3 years return are generally good. Okay, at least over a period of 3 years, on a fall like this or in a further fall, you will definitely get something like 15 to 18% return from here. So on a 3-year plane, so if you have a 3-year view about the or your investment can go for stretch for a 3-year, this fall should be welcomed by investors for investment, and any further fall should be prayed, because those places will become very good place for investment. Because if you look at, if you have done SIP for the last 12 months, and if today's market is going to be below the 12 months low or 12 months average, then in that case it becomes definitely a place for investment. Similarly, if it is going to be closer to the 20-month average, then that means it's even much greater place to invest, because once this pullback ends, you will get a very, very good return over a period of 3 years or so. So right now, you should look towards investing on any further fall. And today, the market has come down approximately 10% from the peak, and probably another 5% fall is possible. So we could probably test the last low of 16,400, 16,000 and odd levels before the pullback again rally starts. So the long-term structure of the market is good for investor, but the short-term volatility will be there till such time certain issues settle down. So what are the issues that normally we look forward, because we must have an understanding of the issues that are now in place. One is the budget. At least we know this budget effect will be on February 1st and 2nd probably. After that, I think market will settle down, will digest, unless there is some major negative news. Okay, this is budget. Okay, then company earnings still continue to come. So we have to see how the US results and Indian results are company earnings. Okay. Then, of course, Fed has already announced its Fed rate decisions, but we have to see how further data come from US. Suppose if the US data, the inflation and employment data comes even more robust, then probably there will be expectation of greater increase. So how strong the economic and inflation data is going to come from US. Then of course now we have got some geopolitical issues like the Russia-Ukraine issues which are there. There is a fear that Russia may invade Ukraine, and that is considered to be quite negative for the markets, at least in the short term. So these are the important things, out of which some of them have played a part already in this settlement. One is, of course, this is an expectation. I don't think the market has really, been impacted by any expectation about the budget. I think the company earnings, particularly the US and Indian company earnings, have had a play. Fed rate decisions, Fed announcements have played a decision, and market is jittery about the Russia-Ukraine issue. So that has had an impact in this January settlement itself. And if you ask me whether it will have an impact on February, along with this, an early part of February, these things will continue to have some impact till such time new news comes. Okay, so these are things to be expected in February. So we can expect volatility mainly because at least this is a known factor right now. But further strength in the economic data will probably make market think that Fed will even move aggressively. So this is something which is not known. What is going to happen? Okay, this could be a short-term volatility of a fall. If it happens, then it becomes a good place for investment, but traders have to be careful. And this will continue for some more time, at least for a week or 10 days. Some important company earnings will come which will have an impact. So these things will have to be known, and so you have to think about this fundamentally, from the fundamental side, and decide about it, because these things are very important for investment decisions. Now, if you just ignore all these things, then doing an SIP, which we have already highlighted, I think probably will take care of this volatility considerably, and you should feel very happy that the SIP type of scheme will enable you to get a fantastically good return over a period of time. So SIP you can do in this and come out with a good result for this. So now we will look at the chart and see what happened in January compared to December in Nifty, Bank Nifty, and other indices and some stocks. So we will look at the monthly chart, and of course this is as on today, this monthly chart, which is today is the Friday, so we'll take it approximately on this month to month. And if you want to be exact, then we have to go to the week. And this one was the December 27th to 28th, right? So maybe this was the so 25th was I think Sunday, and so 25th, 26th, 27th, 28th, 29th, I think, no? Yeah. So so if you look at, it was 17,213 close, and this settlement, which is yesterday, now it was 17,110. So the difference that we see is not even 100 points, which is 0.5% or so. So markets, if you look at it, we can say that the difference is only 0.5%. But the volatility was huge. It moved right up to 18,350, and then from 18,350, it has had a vertical fall in the last couple of days. So this is what the volatility. If you see only on a close to close basis, it may look as if it's only 0.5% loss. But if you look at the volatility, it is a huge volatility that has taken place. And today the VIX has even gone about 20%, 22, 23%. US VIX is now closer to 32, 33%. So that indicates the jitteriness in the market. Okay. Now let's look at the monthly chart now. So monthly chart, we have already said that this is going to be a very important low. So probably the market is guessing now whether to break the 16,410, which may not happen that easily unless there is going to be further and further negative information. So this is one important support as far as the monthly chart is concerned. So we have to honor that. Now weekly chart. Weekly chart is still good, and I think probably next week, if it starts breaking this week's high, which is 17,600, which happened early part of this week, I think then we can say that the bottom is formed. Okay, so till that time, I think probably we have to guess that there is a correction, or probably we are entering into a big consolidation pattern. So at this point of time, I think 16,835, 836, we hope can hold if things don't turn bad, and this particular resistance of 17,610, 620 has to be crossed before the next bullish trend to be established as far as the weekly chart is concerned. So we have to wait for the upside break of 17,600 or so. or at least we have to wait again for a confirmation about today's high, which is 17,350 or so. So right till such time we get break above all those things, we have to see how it behaves at the lower level, because instead of buying at 500 rupees, 600 rupees higher, I think it is very important that we look towards buying at some dips itself. Now, we have already said so many times that the market generally have a tendency to move either 500 points or 1000 points, and either it moves by 2.8% or 5.6%. These are generally followed by the market. So the rhythm is followed. So if we have the 16,840 which came today, 2 days back, into 2.8%, it comes to 471 points. So 471 points, if we add, we get it in 17,310, 315, and that is where it went up and started to fall. So no, this 2.8, 5.6%, I think these things play a very important point as far as the numbers is concerned. So from that point of also, at least we need a 17,320, 324, 311, 310 or 311 to be crossed before we can take a call as far as the rally is concerned. So now today the fall, if you look at the daily chart as far as Nifty is concerned, I think the entire thing was that yesterday or day before yesterday, the rally was up to 17,309. Okay, 17,309, and after that it again fell down closer to the same low level, and then it again started to rise. Okay, and this is after this, now today it went up even further and closed in a very bearish very bearish position. So the first support that we can expect is this particular low if it falls closer to 17,000. So let us look at 17,000 as the first support, probably for Nifty on in a daily chart, and then we have a support then coming closer to 16,840 or so, 840 to 850. So we have to mark this level of 17,000, because that is where there was some important pullback on a particular day. So 17,000 is a support right now, immediate support, because 17,101, now 17,000 can be a important support, and a downside break of this can put it down to 16,840. 17,150, because the 17,150, since it was broken today, because this was the one low here, 17,146 was broken, we had a bigger fall, right? So 17,145, 146 is one important support it should have held today, but that was not to be. So I think 17,145, 146 can become a resistance. So it has to cross first 17,145, 146 to again go back to 17,324. So based on the on these levels, we expect the intermediate trading support to come at 17,000, then 16,850. So these are to be watched, and on the upside 17,150, and then approximately that 17,300, approximately 17,425, then 17,600. So these are the higher levels to be watched. So one level getting broken, we can go long above that. So if 17,150 is broken right now, we can go long, keeping this as a stop loss, right? And if we get anything above 17,300 today, we got it. So we should have put 17,150 as a stop loss. Okay, so minimum 17,150 as a stop loss for anything that we bought yesterday above 17,000 levels. So this is how you look towards trading right now as far as this particular Nifty is concerned. Okay, so because of the volatility, huge volatility today, putting stop losses is becoming very difficult. Open positions are literally getting hammered because of the huge gap down situation. Today it was a gap up. So gap down, gap up happens too frequently, which makes trading overnight a very risky thing. Very risky thing. But if you are trading overnight, be consistent, because one day you get hit on the downside, another day at least you get the long. If you have, then you get a profit on the upside also. So I think it is better to be consistent. If you are overnight and get a call on the overnight, be overnight. 1 or 2 days you are going to get hammered. 1 or 2 days it's going to be on the upside. So I think remaining there is going to be steady is going to be very crucial factor right now. So you can think about these levels as important levels from where the markets can keep bouncing a little bit here and there. From there, so today it closed closer to 17,100 or so, right? So the immediate fall should be 17,000. So if the break is going to be below 17,000, then I think it needs a rally above 17,150 for us to get back to a profitable scenario. So we will watch for this situation now, and we will look at the pivot point for the monthly chart. As things stand, I think this is the 18,350, 16,836, and yesterday was around 17,000, same price, so not much. So 18,350, we'll keep it 18,350 plus 16,836 plus 17,100. It comes to 17,428. So we have a pivot point which is closer to 17,428. So we need at least a close above 17,428 to say that the S1 will not be breached. Okay. So S1 will be 17,428 into 2 minus 18,350. So S1 is 16,505. So almost closer to the previous low. So we are more looking towards the 16,500 to 17,400 temporarily on the pivot point basis, 16,500 to 17,400. So now this month it is closed below 17,400, right? So I think we will be expecting the resistance to come closer to that 17,400 levels. So today itself it came closer to 17,350 or so. So 17,400 levels will be an important resistance, and any fall closer to 16,500 can give a good amount of support. So for this month, I think it is we can look towards investment closer to 16,500. And also another thing is that if it goes down also, there is first 23.5% retracement of the entire move from 7,500 pre-pandemic till now 18,600. The first support comes closer to 16,025. So we don't expect that 16,025 to be broken. So the this is the look at the Fibonacci retracement. So this is the 16,000 level, 15,000, approximately 16,000. So 16,000 levels is what we are expecting to hold. Okay, so this is a very good place for investment, because if it is 16,000, the market would have fallen approximately 2,600 points, which is around I would say more than 15%, right? 15 to 16%. A very good place for investors to add to their position. So look towards that particular place for your investments around the 16,000 mark. Then we will look at the Bank Nifty. Bank Nifty, this month has been much better, and you can look at even the daily chart. I think it is much better. Even though there was a fall today, I think the daily chart in Bank Nifty seems to be much better than Nifty. So that means a lot of individual stocks are giving it a very good support, and they are getting very big bars. Okay, big bars there. So let's look at the monthly chart there. I think this is going to be a very important support. So I think this we have already talked about it many times. So Bank Nifty is definitely still in a bullish scene as far as the monthly chart is concerned. Weekly chart, of course, this week it has formed a good pattern for bullishness. It has formed a very good pattern for bullishness. Now it just needs a close above the last week high, which is 38. This is week high, 38,401. Now it is at 37,689. So we just need a break above 38,401 for the bullishness to get reinstated. So Bank Nifty is to be watched on the upside, because it is I think in the last couple of weeks at least, we see the Bank Nifty outperforming the Nifty. So that means Nifty has been weighed down by other sectors more than Bank Nifty. Bank Nifty constitutes approximately 35%, and that is not giving that much of bearish situation as far as the Nifty is concerned. So It is the other stocks, which maybe could be high T, it could be other stocks which are pulling down Nifty much more badly. So the results, HDFC Bank we said has been good, Kotak Bank has been good. So I think those are really supporting the Bank Nifty. So Bank Nifty on a weekly basis looks good, and on a daily basis, now we need if there is a fall, I think this particular place may give it support. So 37,224. I think 37,224 can give it a good support, because that is a place where probably Bank Nifty a little bit hesitated in the last couple of days and then rallied a little bit and then fell. So this place 37,224 can be a important place to look for. And any further rally above this today's bearish candle means that you can go long, keeping today's low itself as a stop loss. So Bank Nifty, please watch for support closer to 37,225 for a possible rally from that particular level. And then also you can look at the upside break of 38,401, if that can also give you some profit about that. So this is Bank Nifty as far as the daily chart is concerned. Hourly chart also looks okay. It's not that bad, but probably there was some fall today, in a big fall, because that was mainly because of what happened as far as the external reasons are concerned. Right now Bank Nifty is also looking quite good in charts. Okay. Now we will look at the Nifty High T, which has not done that well. So Nifty High T, this is a very bearish month. I think one of those rare bearish situation as far as it is mirroring what's happening with Nasdaq. I think it's just catching up with the Nasdaq fall, and that's the reason why we have seen even good stocks like TCS and Infosys getting hit. So this is a place where probably from where it is now 1, 2, 3, 4. Almost 5 months low right now. So any further fall, probably it can become a good place for investment. So that we will look at this 23.5% retracement. So from here, let's look at what's the. So it's going to come closer to that. So 32,735. I think that means 33,000, it went up to 40,000, 7,000 points fall can really mean about a 18%, 17 to 18% fall. Very good place to invest. So I think any further fall towards 32,735, I think it should be so another 1,000 to 3% down in Nifty IT should probably help it to rally significantly from there. So kindly consider that place for investment as far as as far as Nifty IT is concerned. Okay. Now we will look at the small cap, and no, we will look at the weekly chart, because Nifty IT generally is not traded as far as the except for investment purposes in mutual funds. So instead of this, we will look at some of the stocks there. So we will look at TCS. So TCS, the weekly fall has been there, but generally, compared to even IT stock, TCS has performed much better. So it has not seen that much of a fall compared to other stocks. So I think we should be looking more towards investment in TCS is concerned, because we expect that this low will not break. 3376 will not break. So if there is a fall, I think it becomes definitely a great place for investment. And let's look at the big time Fibonacci ratio for investment. Okay, last time also it held down to 23.5% retracement. So this time also it can go up to the same place, around 34.20 or so. So from 34.20 we have seen a very good rally taking place as far as TCS is concerned. So kindly mark this place for investment as far as TCS is concerned. So good stock to go for investment there at this place. Now we look at Nifty small cap, if at all we are able to get Nifty mid cap index, if it is there. Nifty small cap, Nifty mid cap 50 is there. So we'll look at the Nifty mid cap 100 or Nifty mid cap 150. We'll look at it. Okay. So Nifty mid cap, of course, it has been stagnating a little bit in the last 3-4 months, but there has been no heavy fall. And one of the spectacular rallies that have taken place compared to even Nifty. So mid cap has outperformed very well. And let's look at the daily chart. See, here also the fall has been quite vertical, but in the last 1, 2, 3 days, I think the performance as far as the mid cap is concerned, it seems to be okay. Now it seems it can stabilize around this level. So the fall has already taken place approximately 10% from the top, like large cap. The fall is also around 10%. So any further fall should be looked towards the investment as far as the mid cap is concerned. And this is the Nifty 100 stocks, right? So Nifty 100. And let's look at the Fibonacci for mid cap stocks. So any further fall towards 10,373, so which means it's now 11,242. So another 6-7% fall in mid cap if it happens, like Nifty another 5%, 5-6%. So I think Nifty mid cap also becomes a good place for investment. So Nifty mid cap index also looks to be quite in a good position for good return in future. Okay. Now we look at the small cap, Nifty small cap. Nifty small cap, we look at the 100 stocks instead of 250. We look at 100. See, Nifty small cap, I think the performance is much better. Nifty small cap, but Nifty small cap and all, it is better to look towards SIP, which I told you, because of the risk that is involved there. When it falls also, it can have a very drastic fall, like what happened as far as the fall during the pandemic is concerned. Not only pandemic, right from 2018 to 2020, even when large cap was doing well, Nifty small cap was not doing well. Now there has been a turnaround as far as small cap is concerned. So we need to see whether this particular thing can sustain, or there will be much more volatility. Because if we look at the last couple of years, if you look at 2015-16, the last 5 years, if you take 2016, somewhere there, it is 4,362 and 10,991. So it is almost 5 years also it has doubled. Okay, so I think it has given anyway 20% return per year approximately. So still worthwhile to invest on any pullback. So let's wait for some pullback as far as small cap is concerned, and then look towards a 5-year horizon to give a 20% return. So that's why we're being saying that if you look at a multi-cap fund where you've got small cap, mid cap, and large cap, and go for SIP, I'm sure that you will have a definitely a very good return. Because if you don't know whether you will invest here, so better in the last 1-2 years, if you keep investing somewhere here and you get an average somewhere here, then the pullback will be very good. Okay, so instead of looking at one particular, because we are talking about from some one bottom, now it is better to talk from an average. So if you look at the average, this one for SIP here, if you're done for 12 months and then after that 24 months, 36 months, you look at the return that you get, then that should convince you. So the first thing that you have to do is you have to take the values, work out an average investment for 12 months, and look at the return that you get, average return 12 months, 24, 36, or probably the peak that you get at some stage, 12, 24 and 36. What is the peak that you get? So that will give you a return. In Nifty, we have already highlighted that if you do an SIP thing, surely over a period of 3 years, mostly 18 to 20% per annum you will get. But at least in the next year or so, mostly, very good chance that you will have on an average 11 to 12%, and the worst could be some 7-8%. Worst could be 7-8%, which will be still better than FD. So if you do that average investment, I'm sure that you will have a very lowest return if it comes could be 7-8% next year itself, or the peak could be at least 11%. Okay, 11%, or it could be much higher. So suggest that you look for such a type of investment, and over a period of 3 years and 5 years in SIP scheme, you will definitely get a good return. So investors don't need to be bothered about all this thing. Traders, as I told you, will have to work out their own mathematics and be prepared to take the risk in a volatile situation. Nifty, we have already highlighted smaller ranges also, like 17,000, 17,150, 16,840. Then if it goes down 16,400, 450 levels, then it goes down, the worst could be 16,025. On the upside, we have already indicated that today's high of 17,350 to 17,400 is one. Then it goes up to 17,600 to 650 levels. And then it can fly right up to closer to 18,000 levels. So these things will depend on the budget, will depend on the geopolitical thing, particularly the Russia-Ukraine. Because once the budget is over, suddenly if something happens in the Russia and Ukraine thing, even if the budget is positive, then in that case we may be forced to follow the global thing, at least for time being. So all these things will settle, like how the pandemic settled to give a flourishing return over a period of time. All these conflicts, whatever happens, probably will be digested, and a longer period of time you will always get a good return. So equity markets are therefore, as far as investor is concerned, should be for a longer term. Traders should always know what is the system that you need to put in place, whether you can trade in a fast moving market like this. I told you about how algo and all has taken over, and right now trading is becoming a very difficult thing for those people who see the screen and punch. Because look at the Nifty, because if you say you don't get to want to get caught in a volatile situation, then whenever the loss takes place, it will be huge. Suppose if you are want to get small losses, then you will have more losses, but you will still be able to get a decent return. Now let's look at the Nifty today. Just look at the 5-minute chart. You don't need to even go for 1 hour. Just see that it was even this place. It was at we'll put it the time being here. See, at 135, it was 17,300 plus 135. Just see by 155 by 2 o'clock, by 2:15, 17,109, 200 points fall in less than 45 minutes. It was at 2:15, and this is at 135. So within 40 minutes you have a fall which is approximately 200 points. It's approximately 200 points. So this is the sort of volatility right now. And today morning, if you see, it was a gap up, straight gap up. Okay, and you would not have got great chance to trade if you wanted to go on the long side also, because if you have gone, where will you gone? Suppose if it is good, so you buy here, somewhere here. By the it was around that itself, it was 17,300 also. It was looking like going up, so you will be holding the position. But only when you realize that the market has started to fall, you will cut your position, and by the time you cut your position, I think the losses would have come, right? So it is not an easy market to trade because of the huge volatility that is there. Now, if you look at it, every minute that once it starts breaking some important high or low, it just flies. Now let us see this particular see this day, this place. This is a 5 minutes chart. 45 rupees in just 5 minutes. 16,922 to 16,967. And after a small pause, another rally from the high to low was something like 50 points or 35 points. So within 5 minutes bar today represents more than 35 to 40 points. Such is the volatility in the market. So you will have you cannot put in even if you put in a stop loss, very good chance that it may even get missed. To that extent, the fall and the rise, both sides have been there, because yesterday if you see, the rise was equally spectacular intraday, and today there was a gap up. And today when things were going well, suddenly from 130, 155, 115, 120 it started to fall. So trading is something which you have to consider in a proper way. That is, you have to look at the system that you have in place. It should be encouraged to the extent that you should be psychologically be prepared to accept this type of volatile movements and then get in and get out. Right now, because if it can unnerve you, because the losses that come immediately, you may think that something is going wrong, then you may not trade, then probably only to see the profitable trades emerge. So that human psychology is so very difficult to ensure that your trading system also becomes perfectly successful. So please consider all those things before you do that. So the alternate thing is, if you are an investor now, index or stocks, good stocks or something like that, go for an SIP straight away every day. In the you don't need to even look at the mutual fund there. In your screen itself, ETF is there. You've got a IT ETF is there, ICICI Tech is there, ProTech is there, which is a IT ETF. Then you've got a Nifty Bs, okay. Then you've got Gold Bs also in case. So like that, you've got ETF funds itself is there. So you can buy, you can do your investment in those ETFs itself every day or every week. So small quantities you can keep adding. Okay, so that's the easiest way to get first into the market. So you can invest 1,000 rupees per week. Select probably one or two index or ETF, and then invest in that. Okay, so if you do an investment for 5,000 rupees per month, then you do in the year it becomes 60,000 or so. If there is a greater fall, then you invest in a situation like what's happening now, invest a little more. So that is the easiest way to build your wealth, okay, through an SIP type of scheme, which can be done in the screen itself or probably you can do through mutual fund route. If you are a trader, then you should be prepared to look at the volatility. If the market is so volatile, then you can avoid trading during that particular period. Okay, so you can only choose the time when you would like to go for a trading. Then also you look at which time frame you want. In the time frame also there can be some choppiness, because in this particular time 1 month if you have taken, then hourly chart would have proved helpful. But if you take 3 months back, you can see even choppy actions in hourly chart. So what is good in a particular time frame may not look good in some other time frame. So you have to stand consistently with that for a longer period of time to see the fruit, and also to bear patiently the profit and loss that comes out of it. You may have to fine tune a lot of things before you get it right and doing it systematically. So these things should be kept in mind. So whatever we have said right now, we have talked about the fundamental factors which have impacted the last month settlement, and those fundamental factors will continue to dominate what's going to happen in February. And the volatility in the indices will continue to be there till such time some of the issues fade. Now today it is the corporate earnings which probably can fade within a week or so, because important results would have come and gone. That may not have an impact. Fed rate hike is now known, so that may not have an impact. Fortunately, Omicron issue is faded, so that may not have an impact. Budget issue will come and go. But suddenly if the Russia-Ukraine situation comes, then in that case it can have an impact. But whatever said and done, in the longer term, all these things will fade. In the longer term, it is the question of how the earnings grow over a period of time. So if there is some fall in this particular quarter also in some companies, next quarter it will do well. So cyclical happenings will always be there. But structurally, if things are good, like for example IT, okay, if it is a structurally good sector to be in, okay, so any fall probably should be looked towards investment in such sectors for a good return over a period of 3 to 5 years. Okay, so individual stocks is concerned, we should choose stocks very carefully based on their performances, based on the consistency of their performance, then the return on equity they are providing, what is the cash and all those things. Because don't blindly go and just invest in IPO, because there are so many IPOs which are coming now. So many IPOs are coming, and lot of IPOs have also failed to make money. Okay, you know about most of the issues which came, big issues which came in the recent past, last 1-2 months. I have not given any big return. Okay, I have not. In fact, I have declined significantly from those levels. So just do not rush because you are getting an IPO. You just probably even you can concentrate like what we just said about the systematic investment. That itself will give you a good return. But if you get a good issues like LIC, all those things which are known names, a known result, backed by a big brand and or franchisee valuations, all then in that case, you can look towards investment. But there are many companies about whom you do not know anything about it, so do not rush into such IPOs. One, and so a systematic investment plan will suit you whether you are in whichever index or stocks are concerned. Even good stock, you can keep on investing at various points of time, and on a greater fall, invest a little more. You will definitely get a good return. Okay, so in that, just decide about which sector is structurally good. IT sector is good. So in IT sector, which companies are so like that you choose probably 4 or 5 stocks and do even a systematic investment plan through your broker house in the screen through the screen trading itself. ETF you can invest through the screen trading itself. Trading, please develop a proper system and have a psychological wherewithal to see profit and losses. Okay, now time is 7:45, so you can ask your questions. Thank you. Thank you very much for your participation. Stay safe. We'll see you after the budget. Thank you.